What's up everyone, it's Karthik with MoneyVest. So markets here just almost back up to all-time highs after a very strong labor market report with the unemployment rate ticking back lower down to 4.2%. Got lots to discuss in this market rally with the NASDAQ up over 1.2%, S&P 500 up 86 basis points, and the Dow Jones pushing up over 300 points on the day to pretty much close near all-time highs for these indices. So we've also got volatility metrics as well as market seasonality to discuss going into October here, pre-election, which is going to be very important for the market going forward because that is how we have seen, or that's how the markets have performed in previous election cycles. And we're also going to talk a little bit about the 3-year bull cycle that we're currently in for the markets at the moment. So portfolio is doing well. We are up a little bit over $8,000 as this market rally inflows over $500 billion, almost $500 billion, up almost 1% for the S&P 500, with most of these sectors green, with financials kind of leading the charge up over 1.7%, discretionaries up over 1.3%, communication services up 1%, the NASDAQ 100 also up over 1.2%, XLK was up 1%, S&P 500 almost up 1%, energy, industrial, staples, materials, healthcare, everything was pushing higher, so the markets were very much risk on the day here, with utilities and real estate seeing some liquidity come out of those sectors. So as always, make sure that you drop a like and subscribe to the channel, and also please go ahead and share this video with your friends and family, other traders and investors that can benefit from this information. I would really appreciate that. And again, links to our Discord and Patreon is going to be down below. If you want to get access to all the buy and sell alerts, all the long-term investing alerts, as well as the options portfolio. So long-term investment portfolio up $8,000. Options portfolio has completed officially week 6, and we are up 5.5% total versus the S&P 500, which is up 2%, and year-to-date performance is up over 30% year-to-date. The options portfolio is up, and the S&P 500 is up just a little bit over 20% after today's gains. So again, link's going to be down below if you want to join, be a part of our Discord. Literally, we've got the best traders, best investors in our community that can help you in your journey of trading options, trading stocks, and investing long-term as well. So we pretty much focus on fundamental analysis, technical analysis, options trading, swing trading, and long-term investing as well as a macro analysis on individual companies and, of course, the economy as well. So also want to mention that we've got our Tampa, Florida meetup coming up. So we have decided to do our MoneyVest meetup, the annual MoneyVest meetup in Tampa, Florida this year. And everyone who is either in Florida or if you're planning to travel to Florida for the meetup, we're going to be doing it around November 22nd or November 23rd, so the week before Thanksgiving. Send me a private message on Discord. So if you're a part of our Discord, send me a message there and I'll add you to our separate channel where we are going to plan everything. So we're looking forward to meeting everyone at our annual MoneyVest meetup. We did New York in 2022, Los Angeles in 2023, and 2024 is all about Florida, baby. So let's do it. Just shoot me a DM and we will get you ongoing with our plans for the meetup. So coming over to the first things first, the jobs numbers coming in super strong, 254,000 jobs added in the month of September. That is incredible, with 4.1% being the unemployment rate. That's coming down from 4.2%, which was of course the prior number. Private payrolls increasing 223,000, with manufacturing payrolls still declining over 7,000 jobs. Participation rate 62.7%. Average hourly earnings up 0.4%, which was a little bit more than what the consensus was at 0.3%. And we had 4% year-over-year growth in average hourly earnings, with 34.2 hours as the average work week. Now, we knew that non-farm payrolls was going to be a very important catalyst for the market, because in more recent years, non-farm payrolls has been a lot more reactive for the entire market, even more so than inflation numbers, which was the CPI. So NFP, which is the non-farm payrolls, incredibly important for the market. And after the news came out, we did see that initial spike in the market. Then we had the markets coming down as volatility moved back higher. And then, of course, we saw the markets pretty much finishing near 57.51, up almost 90 basis points here. So if you come over to volatility, if I pretty much mark out the VIX on any of these charts, so if you come over to VIX over here on the 5-minute time frame, you'll notice that the initial, when the numbers came out, we were a little bit more back and forth on the 5-minute chart. You can see that we had that initial drop in the VIX, then we climbed back higher. So this right here was the spike in the volatility. So this was the initial move, again coming down, pushing back up, consolidating a little bit sideways, and then finally coming down over 7% on the day. So as the VIX came down, markets of course moved back higher, being up a little bit over 90 basis points, and the NASDAQ pushing up over 1.2%. So very, very tech heavy, very risk on environment for the market. Now here are two charts that I really want to discuss, which is going to be super, super important. They kind of go hand in hand. They're both from Goldman Sachs. And what this shows us is election year's seasonality for both the S&P 500 as well as the volatility metrics that we're looking at. And they're both pretty much inversely correlated to each other, because what you have here is the VIX seasonal composite. And we are pretty much over here, which is the first week of October. So we just ended the first week of October, and take a look at this all the way through election day, which is November 5th. And if you overlay this chart to where the market is, so this is RTY seasonal composite, which again, if you come take a look here, let's see, RTY. So we got the E Russell 2000 index futures. So again, this is the small caps more specifically, but you can draw conclusions to, okay, the S&P 500 and the NASDAQ kind of performing in a very similar fashion going into the election day of November 5th. You've got the markets pretty much coming down, right? So going into November, which is pre-election, we tend to see two things: volatility going higher, markets moving lower because of that uncertainty regarding who's going to be in office, right, for the next 4 years. What type of economic policies can we expect moving forward? So that right there is something to keep in mind, because if we still expect volatility to be elevated, for us to see maybe potentially one more spike up to 20s or 25 or even 30s, that's going to create that buying opportunity. Again, I'm not saying that we're going to see that. It's just something that we need to be prepared for. And that's exactly why have your cash ready. And if the markets do give you that opportunity to buy in, does give you those bargains and those discounts and deals, be ready to take advantage of that, because look what happens after the elections are over. Volatility tends to see that crush back down. So volatility is coming down, and of course the markets are moving back higher. So this right here is the post-election November and December rally that we are so aggressively waiting for, which is also what Tom Lee has talked about. So this is exactly, I think, the game plan here. Even though I think we closed out green today, S&P 500 is still lower on the month. So if you come over to SPX, we are down about 20 basis points. So this week we are still down 20. Actually, this week we're up 22 basis points, but for the month of October, because I think we had Monday, or maybe let's just go over to the daily chart here. So October 1st was Tuesday. Then we had Tuesday, then we had, of course, all the way through Friday. So Tuesday was a down of almost 90 basis points. So this particular week, we're up 22 basis points, but for the month of October, we're still down over 20 basis points at the moment. So we're still down so far on the month. So if you do see some more weakness for the market with volatility going higher, I think it's just smart to be more cautious in the market. Now, one more thing I want to point out is the euphoria, the panic and euphoria for the market here. And all of these, the red boxes that you see are the greed, right? This is where the markets are extremely euphoric. And that's usually the time to be very, very cautious, because when markets are greedy, we know what to do. When the markets are near fear, this right here has been the times when the markets were extremely in fear category. You'll notice that has also corresponded with some market lows and some pretty much bottoms for the market. So obviously you want to be investing when this index is down to near zero versus when it's near one. All right. So you want to be away from fear. You want to be away from greed and euphoria, and you want to be closer to fear and panic in terms of buying. And this is where we currently are for this particular index. That just goes to show that the markets, with their all-time highs right now, with the broadening of this entire bull market and the fact that we're pushing up, still lacks a lot of buyers and still lacks a lot of euphoria and greed in this market. The reason being is because, once again, I think that pre-election uncertainty is what's causing this. I think post-election, we could easily see a lot of capital getting committed to the market, with this index also moving higher towards euphoria again, and the markets continuing on this uptrend. Very, very nice rally that we're seeing. Now, this right here is retail investor sentiment. The amount of times we've seen more bears than bulls over the past year has dropped to its second lowest level in the last 20 plus years, and pessimism is still fading. And what this essentially shows us is where retail investors are most pessimistic. And every time we've seen market bottoms, of course, that's where peak pessimism comes in to the market from a retail investor community standpoint because markets are selling off, right? So every time you've seen market bottoms, as you can see over here, sometimes over here, pretty much over here, we've seen market pessimism at a very, very high level. And of course, we've come down as market continues to move higher. People obviously are not as pessimistic as they were just a few weeks ago, or even late in 2022 when 98% was that reading, when the markets were pretty much coming into this bottom here in October. And of course, that was the bear market for 2022. And since then, of course, pessimism has completely faded out as the market has completely just blown up in this entire rally, pushing up to new all-time highs. Now, this right here is going to be Fund Strats analysis from Tom Lee. This is their base case, which they have mentioned this October is going to be a bit more iffy, November good. And I think once again, this goes over to the entire analysis of elections. Now, we know that the strike is over in the US, but we still have no idea what's going to happen with the Middle East and what type of tensions and escalations we could expect over the weekend going into next week. But apart from those geopolitical tensions, the election is going to be front and center moving forward as we kind of progress in October here, because the first week of November is going to be crazy, in my opinion, because the earnings season is going to be underway. We've got Jerome Powell on November 7th. We've got the elections on November 5th. So October, when it comes to the seasonality here, the win ratio is really low. We're looking at 22% with an average and median loss of about 3 to 2.5% respectively, versus if you come take a look at November, we're very, very high, 89% win ratio with 2.5% average to a median gain for the market. So all the data points are really just suggesting the very fact that October is going to be a month where volatility could be higher. There's a potential spike. So I really need you all to be prepared for if that's the scenario, right? If that's the case. So first week of September, we got very good buying opportunities. First week of August, we got incredible buying opportunities. And the first day of October, we had a little bit of buying opportunity. But if we continue to see that VIX pushing higher in that pre-election uncertainty, as again shown in a couple of different charts, this one right here, volatility increases, market seasonally tends to do a little bit worse, so it's weaker pre-election. And this is Fund Strats Tom Lee also suggesting for a very, very low win rate. All that shows that November, December is really where you want to be prepared for and positioned well going into this post-election rally. And this right here is, of course, the no landing scenario from Tom Lee, which we have also discussed after Tom Lee mentioned this in the compound interview with Josh Brown. And this is where we are, the 3-month and the 6-month returns for the market after a Fed cut plus a no landing scenario is 100% ratio, 100% win rate for 3 to 6 months forward, with an 8.4 to as much as 12.8% returns for the market. So very, very strong gains there. Now, China continues to move higher. So FXI, KVAB, Alibaba, Tencent, JD, all these stocks keep pushing higher as the short interest also continues to go up. The China shorts are quote unquote all in, even more than at the bottom. So we were at about 60%. Looks like we've blown past that 61% now and getting to some incredibly insane levels. And investors seem to be doubling down on this possibility that there's going to be a potential pullback in China. But every time we've seen that, these shorts have absolutely gotten crushed because we were extremely high here, we were extremely high over here, and then we had just an insane amount of rally just ripping to higher levels. There's possibilities that this is not going to be anything different, and there is a possibility for more potential upside for Chinese stocks. And this right here is the rotation, is what we're seeing among different sectors in the S&P 500 as utilities start to kind of stabilize a little bit, as there is a risk-on rally right now. So utilities being a bit more defensive, investors moving money out of that sector. Real estate also clearly starting to go from leading more towards weakening. XLP, XLF, they've also moved more towards the weakening side. And XLK is now rotating back higher, potentially moving into that improving territory. Communication services and discretionary, they've both moved into sort of like the leading sectors here after being in the lagging sectors for a long time. So communication services, for example, it was kind of flirting in and around these levels, lagging, going into improving, and now leading again. And technology is moving a little bit more back towards that improving category. So we'll keep a close eye on how these tails pretty much moving forward. And the economic growth in the US continues to be on trend with just over 2 to 3% in the US. And gold, of course, has been one of the best performing assets as well, having its best year in decades, which is also something that I've been buying, diversifying a little bit into gold as well. And an illustrative value of $100 invested in gold at the start of each year since 2004. And this is where 2024 is, over a 28% return on a year-to-date basis. Now, this right here is the bull market of 3 years. So this is a 3-year bull market. And does the bull market survive, in year 3? And this is a list of every time we've seen the bull market survive in year 3. And this is where we are. This bull market essentially started in 2022. So pretty much toward the end of 2022. 2023 was green. 2024 looks like it's most likely going to be green. And then 2025, we're going to find out whether this bull market is going to survive year 3 or not. And bull market survives about 58 to 60%. It has survived in year 3 with a median gain of 13.1%, and the 42% times that it hasn't survived, we've seen almost a 6% drawdown for that particular year. Now, going over to the MoneyVest dashboard, we are back at 3.91 on the MoneyVest index. VIX is come down to 18.7. We got negative 5.45% on the contango, or basically the backwardation level. Still, majority of stocks trading above their moving averages. We got almost a 62 RSI once again, with a drawdown of less than 0.5% for the S&P 500 and a put call ratio of 0.97. So this is where we are, still mostly red to yellow. So again, unfavorable risk reward, and that's exactly the whole point. When the markets are pushing up to new all-time highs, what do? We sit back, enjoy those gains, let the markets do all the work for us, and we sell some calls and enjoy those market rallies. When the markets are coming down and volatility is higher, MoneyVest index is lower, market breadth is lower, we're getting down to oversold conditions, that's when we deploy capital. That's when we start to become very, very aggressive in the market once again. So that's really where we are in this entire wrap up for the S&P 500. This was the entire technical breakdown. Of course, we came down to that first area of support, which we highlighted over here, right? In our previous updates, we talked about that's going to be that support aligned with that previous resistance. So we saw a little bit of a 1.5, close to 2% dip in the market, 1.6%, and then of course rotating back higher on the day, pretty much closing in at 5,751. Very, very strong support over here for the S&P. So if October still has that volatility and that uncertainty, some levels to keep in mind, of course, 5670 down to 5530 down to 5400. Those are the 3 levels that I'm watching very, very closely on the market. And the NASDAQ, of course, pushing right back up. And this right here is going to be that higher high and that higher low. So well within this context of this uptrend for the NASDAQ as well. So very, very nice, consistent higher highs and higher lows. Did see a little bit of a pullback from those highs. So you can see that we were down over 3%, small dip in the market, and then pushing right back up over 1.2% on the day today. Crude oil prices also pushing up on the month. They're up over 9% now. This right here is the entire technical breakdown, breaking out of that resistance at $73, which of course has been turned into a support now. And the next target and resistance going to be all the way up to $80, $81 per share for crude oil. So a little bit of that lower highs and lower lows. Next resistance all the way up to $80 per share for crude oil. And volatility, of course, as we know, we did get a minor spike in the volatility here in October. So if I essentially delete everything just for the time being and just point out to the fact that we did see a massive spike in August, massive spike in September, and then another increase in October. And right now we're just settled at around 19 to 20 levels. And if you do see some more potential upside in volatility, just be ready for those buying opportunities. I know I will be, with cash ready to deploy into the market. So that's where we are. Hope you all enjoy this video. We're going to be doing a full technical analysis on Magnificent 7 as we always do over the weekend. So Saturday, Sunday dedicated to more detailed technical breakdowns on individual stocks, including the Magnificent 7. But this video, we're going to break down, of course, the markets here. That's about it. To new all-time highs. Congratulations to everyone for closing in a pretty decent week, and the options portfolio at a new all-time high. And of course, the long-term investment portfolio also doing really well. So if you want to get access to all the trade alerts and ideas and the options portfolio as well, link's going to be down below. Feel free to join. There is a 16% annual discount available for a limited time. And please make sure to drop a like and subscribe and share this video with your friends and family and other traders and investors that can benefit from this video as well. Happy investing. I'll see you all in the next video.